A little bit further north from Australian shores, there's an M&A resurgence in Japan and China as well. The strong yen is giving Japan Inc. buying power. The value of foreign deals by Japan has nearly doubled. And China's outbound deals jumped more than 50% in the first half of the year to a record 99 deals. Let's get back to Marc Faber, who is with us around the set today. If you're a Japanese company, you're sitting with cash on balance sheet with almost no yields around to speak of. Would you deploy cash by getting involved in M&A?
Yes, but that's the whole point about investing. At the present time, you're a Japanese corporation or you have $1 billion in cash. What do? Buy US treasuries or stay in Japan, an economy that will not grow? So if you are cash rich, what you will do is expand in Vietnam, in Cambodia, in Mongolia, in India, in Central Asia, Latin America, Africa, wherever it is. But you're not going to stay in a market like Japan where there is no growth, and you're not going to put your money at 2.5% in US treasuries.
The other component here is valuations on companies. What do you see valuations in Asian companies looking like at the moment?
Well, that depends where it is. But in general, let's say I look at Singapore companies, then I look at Malaysian companies, Thai companies, Indonesian companies, Philippine companies. I don't think that they're terribly overvalued. In Thailand, I can buy you a portfolio of stocks that will have a yield of, say, 5%, dividend yield. And cash flow yield would be much higher. I can give you a stock portfolio here in Singapore that will have a dividend yield of, say, 5% in a strong currency, in the richest economy in the world and the best run economy in the world. So what do you prefer? A 10 years US Treasury at 2.5% yield that has no upside potential, in my opinion, over the next 10 years. This is the maximum you will get the 2.5. Or you prefer to own a portfolio like this. It will fluctuate and go up and down, but I think over the next 10 years you will do much better.
I couldn't even be bothered to cross a room for 2.5% yield, Mark. We're going to come back to you in just a moment.